Well, I guess what we've got to assume is that you've taken all the advice from CBBC and you've decided how to go about your business in China, and you've taken advice from UKTI and developed your strategy, and maybe you've been with Paul on his mission, and you've got some deals, you've got some business, and you're wondering now how to fund fulfilling some orders, or some potential orders. Anyway, that's one way of looking at what I'm going to tell you. I represent the sister department to UKTI. We're called UK Export Finance. We are a government department. We're a small sister department to UKTI. I'm going to tell you a little bit about us and a little bit about what we can do, and concentrate on 3 of the products, particularly for smaller and medium-sized companies. And I'm going to try and whiz through because my slot's a little bit shorter than the 2 previous ones. So first of all, just telling you a little bit about who we are, so you realise we are a government department. We've been the UK Export Credit Agency for many decades, and recently, sort of post-credit crunch, our remit was expanded so we could introduce some new products to try and help smaller companies. We did that by first of all developing really 3 main products that we hoped might offer some help to companies seeking to finance their export orders: an insurance policy and a couple of schemes whereby we give support to banks in the hope that they can then support exporters in the area of working capital and bonds. And I'm going to talk about really for the bulk of my little talk. We also decided we better spread the word that we're back in town with regard to short-term type credit business, and we've done that by having 12 people like me dotted around the country in each of the regional centres. And UKTI very kindly has let us base ourselves in their local regional offices where the international trade advisors work, and I think 1 or 2 of you here already have links with UKTI's international trade advisors. My colleague Matthew is here today, and he's one of the London UKTI international trade advisors, and happy to have a word with you. So we're working in really close partnership with UKTI, and please also remember we're not there to try and compete with the private sector with what the banks can do or the credit insurers can do, just to complement what they can do and come into play and have a role where they can't support you and your needs. Who can we support? Well, it is very similar to UKTI in that we're looking at companies who are registered in the UK, who are involved in international trade, not domestic. Everything we do is about exporting, promoting and helping exports. We can help if you're a seller of goods or services, and I guess you'd only really think of needing us if you're needing to offer credit terms. So in other words, you have to lose possession of your goods or you perform your service before you've been paid for them. So you're carrying a risk and you're carrying a weight to be paid. Don't worry about values. We're happy to support deals of any size, from small to very large. And these days we can look at quite a high percentage of foreign content being involved in your offering. It doesn't have to be 100% UK made, although that is nice to those of you who are UK manufacturers. What sectors do we support? For the last 20 years, my department's really been supporting the suppliers of major capital goods and projects. But no longer. This list, hopefully you'll see, yes, manufactured goods, capital, semi-capital, but also a huge range of other products. And I can't imagine that any of the things you're thinking about, Paul, the high technology products, wouldn't be acceptable to us for inclusion under our schemes. The products I'm going to tell you about, mentioned before, there's an export working capital scheme, a bond support scheme, and an insurance policy, a credit insurance policy. And when to try and think you might want to contact us, me in particular as your London contact? Well, it would be when you can't get what you need from the private sector. So, for example, those of you who are familiar with credit insurance as a product you might buy to protect your non-payment risk, if the private sector credit insurers can't support you, and sometimes they are reluctant to, for example, support one-off contracts in the more difficult parts of the world. I don't know how they would regard China. Sometimes they'd be very happy to support China, sometimes as part of a package of export business that you're giving them. Be for you to find out. If you can't get what you need from the private sector, think of us. Similarly, with regard to working capital support and support if you need a bank to put up bonds for you, we're there if the bank would like to support you, but they can't just get comfortable for the full amount. So our role is to try and increase the amount that the bank's willing to offer you. And I'm going to explain how these products work. The Export Working Capital Scheme. The principle of this is that we work with your bank and we work contract by contract, and we try to share risk with your bank so that if together we can arrange for you to have a working capital loan to enable you to fulfill a contract, then we will give a 50% guarantee to your bank in respect of your ability to repay that loan, which perhaps would be the time the customer pays you. And it hopefully will enable your bank to offer you a larger working capital facility than they otherwise would, because we're sharing 50-50 with them, and they, of course, will always look at security. I'm sure you're familiar with that. But now if we're offering as a substitute for security a 50% guarantee, it might hopefully allow a larger value to be on offer. So it comes into play where, for example, your business is growing. And a market like China, I think, is typical of emerging markets where business can grow very rapidly and put strain on your business's cash flow to be able to take advantage of the growth and fulfill those orders. Or maybe it's just one large single deal that you get, and you're wondering, how will I finance that contract? And the way we'd suggest you could go about it is look at the nature of that deal, look at the money you have to lay out, for example, to buy some raw materials that go into your product, or to gear up and finance your manufacturing phase, and then to allow for the transit time to China, and then to allow for a Chinese customer to maybe have a bit of credit, which I think they probably want more and more. And you work out any money coming in. Maybe you've managed to secure a deposit, some sort of pro forma payment up front. Lovely. And you've got a cash flow gap. You work out what that is. Then you could hopefully approach your bank, because, as I say, we work with the banks, or you could, with pleasure, ring me. And between us, the bank and us have to look at your company's ability to repay that loan. So that means looking at your financials essentially, and see if together we can manage to support the amount you need. Now, we don't get involved at all in the bank's security over your company. We know the whole thing wouldn't work if we did. And we don't get involved in charging fees either to look at an application or provide our guarantee. What happens is, between us and the banks have agreed to work with us, and they will pay us a share of the fee they charge you in the normal way. And at the moment there are 9 banks working with us. All the major high street banks are. So that's that one. And a little example of a company who's used us is JDR Cables. They are a very well established company. They make umbilicals and cables for the oil, gas, renewables sector, undersea cables. And they'd won a large contract. It was to supply an oil and gas installation in the South China Sea. I think it was a 7 million contract. they had they worked out the working capital gap was about 3 million, and it was for about 2 months. And they talked to their bank, who talked to us, and we were happily able to provide the bank with a 50% guarantee, which meant the bank was taking 1.5 million, we're taking 1.5 million risk. I think we made the working capital loan valid for 3 months to make sure there was plenty of leeway, and it all worked very, very well. And I think probably quite a good example of where we can come in and support increased volumes. It wasn't a sort of borderline credit case, it was simply to enable more and more business to be done by that bank, who was very happy to support its customer and wanted to support as much as it could. Now, the bond support scheme is very similar, but I'm not going to dwell on it very long, because I don't know how frequently any of you might get asked by a Chinese customer to put up a bond or something tantamount to a bond, a guarantee or a standby letter of credit. It could happen to you in the future. It's simply a situation where you're able through negotiation to have an upfront payment, but your customer has an anxiety, well, what happens if you don't perform? They want to know that there's a lump of money they can draw on demand if they feel you haven't performed your part of the contract. And it can be a huge obstacle. Companies going to their banks to say, well, I've got to put this bond up, might find that their bank's reluctant to do it without, I don't know, knocking that value off an overdraft facility, or requiring cash collateral, requiring to keep the full amount of the advance payment as cash collateral. And it could be an obstacle to actually being willing to bid for business or fulfill business. So similar to the working capital scheme, we will provide a guarantee to the bank in respect of that bond for that specific contract, and we'll actually go up to 80% to try and ensure that when the advance payment comes in, the bank is willing to release the bulk of it to yourselves as the exporting company to help you gear up and fulfill the contract and make use of that money. So it works very like the working capital scheme. It's an arrangement between us and the bank behind the scenes. We don't take security unless the bank has taken very contract bond specific security, and we don't take any extra fee other than the share we've agreed the bank shall give us. And there are 15 banks participating, including Standard Chartered, who I know have got people here today, and all the major high street banks as well. Stage Technologies, just to give you a little example, not a China example, of a company that's used our services here. I don't know whether anybody, I bet you'll all have seen Chitty Chitty Bang Bang, or your children will. Stage Technologies did the machinery that enabled the car to fly, and they do the stage technology that enables Cirque du Soleil to do all the magical things it does. And they had a contract to supply Saudi Arabia with stage technology equipment for a big entertainment centre, and their contract was, I think, 3 million, and they needed to put up a big bond, 800,000 advance payment guarantee in respect of a nice deposit they were going to get, which they needed, and we were able to give their bank an 80% guarantee in respect of that 800,000 bond, so that in return the bank only needed to retain a small amount of cash and could release the rest of the advance payment to help Stage Technologies get on and make the equipment needed. These two products, how would you take it further if you thought the working capital scheme might be of use to you at some stage? Well, you can talk to me, you can mention us and this product to your banks by all means and put them in touch with me. But if we're going to take it further, ultimately what we're going to need is to look at you and your financials alongside knowing what sort of facility you might need. So having some accounts is essential. Up-to-date management accounts too is nice these days, and some idea of business plan and forecast too, if possible. We then, alongside with the bank, undertake our own credit risk assessment and do whatever due diligence we need to. Always have to mention that if your contract involves the use of an agent, we've probably got a little extra layer of due diligence we've got to do on that. And then if we feel able to support, we tell the bank that, so they're all ready and waiting, so that when you actually need the money, they can disperse it to you. And just worth me saying on the working capital loan, it's the bank who actually makes the loan available to you at whatever stages you need the money. And that can really be at that very early stage before you've shipped anything, while you're getting yourselves paying all the expenses you have to lay out to fulfill the contract. Lastly, this is straightforward credit insurance, the export insurance policy that we have available. So here what I'm thinking about is a situation where you might want to expand into China, and you might, for example, have been lucky enough to get some pro forma payment for your first one or two deals, but Chinese customers more and more are expecting credit terms, and your problem might be that you feel you can't take that risk, the risk of not being paid. And this is a credit insurance policy that protects you against the risks of non-payment. It operates in all markets in the world, and apart from we don't bother with Europe and the very wealthy markets, America and Australia and so on, because the private credit insurers can amply well meet companies' needs in those areas. But in the more difficult markets, the sort of risks we're able to cover are political risks of upheavals and wars and anything like that, economic risks like you needing to invoice in dollars, for example, and a country not having the foreign exchange available when the time comes to pay. And then the commercial risks of your customer going bust, or simply not having the cash to pay you on the due date. These are the sort of risks we can cover, and the principle of credit insurance, just like lots of other insurance, you pay a premium based on the value of the business we're insuring, your invoice value, and if something goes wrong, we pay you up to 95% of the amount you haven't been paid, or the costs you've incurred if something goes wrong before you even ship. I mentioned it's contract by contract, I think, so we look at each deal as it comes along. We can work with your bank, and hopefully your bank might feel more comfortable knowing you've got credit insurance protection. We can even arrange to pay claims directly to your bank if that makes them feel even more comfortable. On the other hand, you've always got to remember it is a normal insurance policy, so you need to comply with your part of the contract in order for the claim to be valid, not ship late, not ship the wrong products and so on. Many companies access credit insurance through a credit insurance broker. Quite useful for giving you advice as well. Little example of a company that's already used our credit insurance policy is TCB Arrow. The market though is Russia, not China, but I think a classic example of where a company lost faith as a result of the credit crunch. This company manufactures, it was selling cables, plastic, they do plastic extrusions, and they were selling to a Russian distributor, and the products were going into Lada cars, but their distributor went bust in the credit crunch, and the company really was put off exporting in quite a serious way, but then realised they needed to go back in and found a new distributor in Russia, but found it very difficult to get the private credit insurance market to give cover. Distributors are very difficult to credit insure. They don't tend to have big balance sheets. We were able to find enough information about this distributor to give something like a €400,000 credit limit, allowing the company to sell on credit terms of, I think, 60 days. And they were paid, and the credit insurance can now roll over and grow based on some good trading performance, and hopefully will allow them to increase the business they do. Could work just as well in China. How do you access the credit insurance product? Well, often what people want is just a little idea of can we underwrite the risk of a particular buyer, and what will it cost? And we can do that for you just on receipt of some basic information. who your customer is, what the credit terms are, what amount you want, and so on. That's what I mean by those 14 simple questions. To actually have a policy, you complete a more formal application form, and this time, not like the working capital or bond scheme, we're dealing with you direct. We issue the policy to you directly. The hard part, particularly in China, is gathering enough information on the customer, on the buyer, on that Chinese entity. It's not easy. We'd ask always for your help in doing that. As Vince has said, you're quite likely to have had good contact with your customer. It tends to work that way in China. So pick us up an extra brochure, take some photographs of the factory. Please do whatever you can to help gather information for us, financials if possible. We're going to have a job doing enough due diligence, but we'll have a go. When we've told you what premium rate we would quote, when we've told you if we can underwrite your buyer, if you want to go ahead, we then make you a formal offer of this little contract by contract policy, and you accept it if you want the cover and if your business is going ahead. Last of all, very quickly, I'm going to run just to mention to you this list of more traditional UK export finance products, just in case any of you are going to be in the business of larger projects as time goes by. ECGD, as it's also known, but perhaps better known in the past, as a provider of support by way of guarantees to banks for major projects called supplier credits or buyer credits. That's there for you. There's support for you if your business is going to be paid by letter of credit, but your bank can't manage to confirm the letter of credit. We have a facility that helps support the bank so they can put their confirmations on a letter of credit. Happy to talk to you more about those later if any of you have got specific questions. Happy to talk to you about any of the things I've mentioned if you'd like to have one-to-one chats with me later.